Good morning from our world headquarters in New York. I'm Menace Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
President Biden and Saudi Crown Prince Mohammed bin Salman speak as diplomatic efforts and military efforts to continue to prevent an Israel-Hamas war from spreading to the wider region. This as the Israeli ambassador calls on the UN Secretary General Guterres to step down. China steps up its support for the economy with additional sovereign debt issuance and an increased budget deficit, all as Country Gardens trustees declare the developer in default on a dollar bond for the first time. And shares in Deutsche Bank jumping by the most in a year. This is the lender plans for more payouts amid higher rates.
I'd say on a long-term basis, the benefits of higher rates will be with us into sort of 25 and beyond. You know, this is not yet, I would say, a fully normalized rate environment for banks.
James von Moltke, the CFO, an immediate response in the stocks. That's $3 billion of a payout and a guidance that this is what they're going to do with their capital. Being rewarded by the market this morning, up 6.43%. More from James von Moltke's interview with Danny Berger a little bit later this hour. I want to take you straight into the market. So you have a trillion yuan of stimulus, $137 billion. Market's unimpressed. That's China's issue. You have a stabilization in the EFO. Again, not giving any great strength to the American narrative this morning. It was supposed to be a cloud with a silver lining. Well, it was for Alphabet and Microsoft. Microsoft saw the benefit. Alphabet was the tortured soul when it came to the cloud numbers. The cloud numbers missed at Alphabet. The stock is down over 6% this morning. Microsoft, the strongest sales in 6 quarters at the top level, and it is their cloud business that's doing well. Despite all of that, equities are lower this morning. There just seems to be a flatness to this market this morning. When you look at Asia, they're desperate to try and hang their hat on this Chinese stimulus, but it is barely 1% of GDP. Back in 2008, when we were really in crisis mode in China, they delivered 12% of their GDP. John Liu joins us very shortly to contextualize the stimulus that has come through at the PBOC. Is it a game changer, or is it just more debt junkie kind of issuance that you're going to have? To Europe, down 0.25%. Oil is stabilizing, down for a 4th day. That should have given succor to the European complex, but it hasn't. You have one major stock. You have a number of major stocks reporting. Porsche giving out good news, and then you have Worldline at the bottom of your screen. This is a French payments company, and it is bruised. It is down 50-odd% at this juncture, and that's what's dragging us lower here in Europe this morning. Danny.
Menace, it almost feels like earnings matter, that we can pay attention to earnings. At least that's what these markets are telling us. The movement is coming from idiosyncratic corporates. It's not really happening, at least for the time being, on the macro level. There was some action in the euro. It started out stronger on the morning, perhaps hopes of China stabilization from fiscal support. We had EFO numbers, better than expected survey coming from German corporates. Even so, euro unable to hold on to gains, weaker by about 0.1% versus the dollar at 105. 10-year yields, those are ticking up higher, 4 basis points. They had traded lower yesterday. It was the front end that got the boost yesterday, thanks to stronger U.S. PMIs, which has been a clear contrast of strong PMIs in U.S. versus weakness in Europe. And I had the Aussie on here. Here was another narrative, Menace, that went away pretty quickly. CPI in Australia coming in stronger than expected. That did boost the Aussie. That did have the front end to the Australian curve up about 10 basis points. That's pretty much vanished. We are back to King dollar being the end-all, be-all. And with that stronger Australian CPI, it's not having an impact on the world bond market, but I still think there's just so much unknown a day on the eve of the ECB decision, Menace. When I was speaking to von Moltke over at Deutsche Bank, he basically said that, look, a financial accident, it is a near certainty. It is going to happen. But when it happens, everybody has been surprised, the strength of businesses and the strength of households, that rope seems to keep getting longer.
Well, the whole world was evidently caught short when we had that banking crisis back in the springtime. You're looking at the banks under pressure again. Where will the accident happen? We're not in subprime land as we were in 2008. And I think Jamie Dimon yesterday in Riyadh really encapsulated the thinking of the markets. There's a fiscal largesse in peacetime. Look at the Chinese doing it again today. There's an omnipotent feeling that they're going to be able to manage this. And that's what fills that group of people around that table quite literally with dread. Let's pivot to a little bit more on the Middle East, this time on the diplomatic efforts. They continue. President Biden and Saudi Crown Prince Mohammed bin Salman discussed efforts to prevent the conflict between Hamas and Israel from escalating. Meanwhile, we have the Israeli ambassador to the United Nations demanding that Secretary General Antonio Guterres resign after his comments that he made in regards to Hamas' attack on October the 7th. Oliver Crook is with us in Tel Aviv. Oliver, look, what is at the heart of this dispute? I watched the clip of the ambassador, and it was pretty hard-hitting towards Guterres. This is a strong and strident call. Where do we start this conversation?
That's right, Manis, and this has spilled over into the sort of hallowed halls of the United Nations in New York, with the Secretary General Antonio Guterres basically pointing to the Israeli actions within Gaza, saying that there have been clear violations of human rights. And I'm going to quote here because it's quite important to put everything into context here. He said, "The grievances of the Palestinian people cannot justify the appalling attacks by Hamas, and those appalling attacks cannot justify the collective punishment of the Palestinian people." He went on to say, "It is important also to recognize the attacks by Hamas did not happen in a vacuum," also adding that the Palestinians have been subjected to 56 years of suffocating occupation. This is what was not taken at all well by the Israelis. The foreign minister canceled a meeting with him. The UN ambassador, the Israeli ambassador to the UN, basically went out and said that he was shocked by the statement, and he said it proved conclusively beyond any doubt that the Secretary General is completely disconnected from the reality in the region, basically saying that he's expressing an understanding for terrorism and murder. That is the political tension.
I mean, it's a tension that obviously this is a more important scale, but it feels like it's playing out in so many places. I mean, you look at what's happening at American universities and the dialogue there. That dialogue, be it in America, be it abroad, be it with the UN, that dispute, how does that fit into the broader trajectory of war?
Completely, Danny. And this is going to be at the heart of all of these conversations. What the Israelis will say is that they do not target civilians, that everything they do is to preserve civilian life, but that Hamas sort of clouds itself and cloaks itself within the civilian population. That being said, the death count from what we hear within Gaza has exceeded 5,000 people, closer to 6,000, most of whom are civilians. So, of course, this is something that you cannot ignore. And this will come to the question of self-defense. How expansive is that understanding of self-defense? And a lot of different people will have very different answers to that question. The Arab world say that what Israel is doing has exceeded that. Even the United States has said that how Israel goes about this is critically important. They have not made a sort of external criticism of that as of yet. But again, this is fundamental to every issue, including aid. For example, let's talk about fuel. Getting fuel in there is important for all of human life, but it's also something that will fuel Hamas's war effort. So it's at the center of everything.
Oliver, thank you very much. That is Bloomberg's Oliver Crook in Tel Aviv. All right, over to China now, where President Xi Jinping has stepped up economic support, issuing additional sovereign debt, raising the budget deficit ratio, and making an unprecedented visit to the central bank. Joining us now is Bloomberg executive editor for Greater China, John Liu. John, there's a note out from SocGen saying this is not yet a bazooka, but it's significant in form in signaling. What is the significance of that form and that signal?
So I think it's the way that Beijing is doing this that is very important. They are changing the size of the budget deficit in the middle of the year. It is very rare that they do this. The last time they did it was in 2008. The time before then was in the Asian financial crisis at the end of the 1990s. And also we had President Xi Jinping visiting for the first time since he's been leader of this country, the central bank. All of these things point to the idea that, hey, Beijing is willing to do things it has not done before to try and stabilize this economy.
It's interesting that there's sort of less than a punchy response from markets. So maybe it is, again, waiting to see how this feeds through. Can we talk about Country Garden, John? Good to see you today. It has been deemed that we're finally there, that there's a default on the dollar bond for the first time ever. So what took us over that critical line, John?
So there was a notice sent by the trustee of the bond, which Country Garden missed the payment on. Citigroup sent that notice. So that is the first official sort of statement that what has happened is a default. Obviously, the payment was due first back in September. They did not pay it. Then the grace period ended a couple of weeks ago. and they again did not pay. And so this is something we've been waiting for. The fact that they have defaulted is not a surprise, but it will have implications for how other bonds, how other creditors deal with that money that they're owed, and also on the credit default swaps, whether those will pay out or not.
John, thank you very much. That is John Liu in Beijing. All right, let's get you some of your other top stories that are trending on the terminal this morning. House Republicans have nominated Mike Johnson of Louisiana as their latest choice for Speaker. Johnson, who is the party's fourth Speaker nominee in just 3 weeks, said he is very confident he will be elected Speaker. A vote is planned at noon in Washington.
Hong Kong's planning to cut extra stamp duties for some home buyers and reverse a pandemic-era increase in stock trade levies. The chief executive, John Lee, detailing the measures earlier today as officials seek to boost the property sector and revive the city's status as a financial hub.
And here's one you mentioned, Manus. French payments company Worldline is plunging. It's erased more than $3 billion of market value. That happened after the company lowered its outlook and scrapped its revenue growth target for the next year.
Well, coming up on the show, we're going to catch up with Mike Scott of Man GLG on where you want to be in this credit cycle. What pops, what rocks. Plus, we'll speak to Tiago Kapulskis, dig into the tech earnings. Where is the silver lining in Clyde? Good morning.
This is Bloomberg Brief. I'm Danny Berger in London alongside Manus Cranny in New York. Manus, John Authers has a great piece out today talking about credit. Within there's a little nugget from SocGen. I want to show you this chart because it's forward price to earnings valuations ratios for both U.S. and Europe small caps. If you look at the negative column, so that's way over to the right of your screen, in other words, the zombie companies in the Russell 2000, you can see it's significantly higher for the U.S. So what happens when we reach refinancing walls? Joining us now is Mike Scott, head of global high yield and credit opportunities at Man Group. I mean, Mike, when rates are low, this kind of thing doesn't really matter, right? But we are hitting, or we're getting close to, those refinances in 24, 25, and 26. So what's going to happen to all those zombie companies in the U.S.?
That's a great question, Danny. And I think, from what we see, this refinancing rule is coming certainly much more into view. As we look across the globe, it's slightly more onerous, I would say, in Europe than the US. And, as we look into 24 and beyond, these businesses are going to be experiencing a much higher interest rate environment for refinancing that debt. Certainly, certain businesses will be able to work their way through that. Other businesses certainly will not. And we do think that this will be very much a driver of dispersion as we look forward over the coming 12 to 24 months.
Mike, good morning. Good to see you, and thanks for coming in. Look, we can debate the size of the cliff or the debt cliff that there is, but continuing on from Danny's point, John Authers has a cracking piece out this morning, and the title of the chart is Money's Too Tight to Mention. And he looks at the Fed survey. And where we are, this is a quarterly survey, the proportion of banks that are tightening to loosening is 50%. We've only seen it exceed that in the GFC and in the pandemic. How tight is financing out there? Homage to John Authers, by the way. Big ring the bell for him.
Well, I would say certainly sort of echo that view. I think we are very much in the later stages of a credit cycle, and ultimately the actions by the central banks are there to tighten credit conditions. And what we see is...
but is it tightening quickly and aggressively? How would you define the tightening at the moment?
I think it's certainly, as we look forward into 2024, I think, we are in a sort of the situation where, the ability for certain companies to access capital is going to be constrained. And I think, as I say, there's going to be the haves and have-nots. Certainly what we look for are businesses that have, sustainable cash flow generation. They potentially have assets in which they can monetize to delever the balance sheets. And it really is a case-by-case basis in terms of how the ability of these companies is going to play out with respect to refinancing of their maturity walls.
Can I just ask you, is it a relief to actually have this environment again where there are haves and have-nots? Because before it was like, okay, you buy anything and you're fine. It doesn't matter.
I think that's a very, very good question, because I think, this is really an environment in which it really favours sort of active management and stock picking within the credit space. We have seen, a number of sectors that have really benefited from that low interest rate world, of the low inflation, the disinflation period that we had over the past decade. Real estate being one, it attracted an awful lot of capital to effectively go on an acquisition spree,
right,
and sort of build the businesses through acquisition of assets. And this is now coming home to roost. Whilst there are businesses that have been very prudently managed, they have very relatively simple capital structures, and can benefit from actually, or can actually have a relatively seamless, right, refinancing.
So some are going to be okay. Some have prepared themselves well for this moment. Manis, jump in here.
Mike, I'm just wondering how brave are you feeling this morning? I mean, you've got a nice late start. I came in at 2:30. Just bear that in mind. Are you brave enough to, look large into junk? I mean, they've repaired a lot of the damage done during the banking crisis. Danny and I chatted this morning before you came in, and we just thought, are you brave enough to sort of pick up junk? And if so, where?
So I think, when you look at the junk market, it's very important to look underneath the surface. I think too many people do look at the market in aggregate, and that really doesn't tell you actually what's going on beneath. And there are certain sectors and business models that we think can trade through this environment of tighter monetary conditions, but also one in which nominal growth is potentially not going to be as strong as we've seen over the past 3 years. And there's other sectors that we think will struggle to refinance in this new interest rate environment. We are seeing certainly value within businesses that have strong pricing power, stable cash generation, and often benefit from, say, hard assets. So we do think that consumer non-cyclical parts of the market, such as supermarkets, are quite interesting in this environment. As well as even financials, particularly within Europe. And I do think that is actually quite a stark difference to what we see within the US, and particularly the regional banking sector.
Yeah, that is interesting. Also, when it comes to the regional banking sector, I spoke with last month the Ares CEO, Mike Arangetti, who basically said we're in 2 years of a banking crisis. It's not over yet. Do you see that, again, for both the regionals and in general of just a credit crunch that might be looming?
I think it's quite a specific issue towards the regional banks within the US. When we compare the regional banks to say, the European banking sector, we think there are very stark differences between the two regions. Europe, we think, has been very well regulated. Capital levels are very healthy, and asset quality is relatively benign to what we see within the regional banks. And from our perspective, it's the CRE exposures, or the real estate exposures that these regional banks have taken on, we think are going to be increasingly problematic. And we've started to see that with recent results. I think everyone's very familiar now with how the deposit situation has been playing out and the deposit betas, etc. But I think on a go-forward basis, it's really about the asset quality problems that these banks are now facing. Certainly provisions have started to pick up within the regional banking earnings that we've just seen. But this is going to be a story that's going to be with us for several quarters. It's not something that can be worked out through liquidity injections from the Fed.
Right.
OK, Mike, thank you so much for joining us this morning. That is our guest host this morning on All Things Credit, Mike Scott from Man Group. A quick snapshot of what's going on in the bond markets. You've had some pretty big whipsaw days. You're just seeing yields rise ever so slightly. 10-year paper still firmly below the 5% plimsoll line. 485 is where we are this morning, but there is a nudge higher on German yields as the IFO stabilizes in Germany, and gilts up small at 455 right here on Bloomberg. Good morning.
This is Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York. Shares of Deutsche Bank, they've climbed. They've been climbing all morning after the firm announced its plans to accelerate payouts as higher rates fuel growth. But what about the macro environment? What do higher rates mean to that? Here's what CFO James von Moltke had to say on that.
There's a certainty of accidents in an environment of rising rates, especially as rapid as it's been over the past, say, 18 months. There have been accidents out there, some reactions, but my overall sense is that the resilience we've shown in the financial industry, the financial markets, as well as corporates and households, has been unusually strong. Will there be more accidents? I'm confident, but at this point, actually, again, surprised on the upside that it's been as contained as it has.
I feel like this is the tension we're all grappling with at the moment, Manus. I mean, you recall to the beginning of last year when everyone said a recession is on its way, something's going to break. Plenty of people have told us something's going to break, but it hasn't yet. Things look okay.
No, I mean, you can technically say you had a spring break, excuse the pun, with First Republic and the other banks.
I like that.
The question is it going to be banking or is it going to be something else in the real economy? Anyway, we're going to catch up and talk about the real economy and tech earnings with Tiago Kapulskis. He joins us next. You're welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. President Biden and Saudi Crown Prince Mohammed bin Salman speak as diplomatic and military efforts continue to prevent the Israel-Hamas war from spreading to the wider region. This as the Israeli ambassador calls on UN Secretary General Guterres to step down. China stepped up its support of its economy with additional sovereign debt issuance and an increased budget deficit ratio, all as Country Garden's trustees declared the developer in default on dollar bonds for its very first time. And shares of Deutsche Bank jumped by the most in a year as the lender plans for more payouts amid higher rates. Now, Manus, that China story, it had really done the work this morning to lift European futures, to lift the euro. We are looking at something very different at the moment. Over the past 30 minutes, as we've had our show, I don't think it's us. I don't think we've broken anything. Euro has moved decisively lower, still at 105, but now lower, weaker by 0.2% versus the dollar. There's a clear dichotomy between European data that has disappointed and strong U.S. PMIs that we had yesterday. The IFO survey, though, in Germany did point to, hey, perhaps Germany can avoid the worst of a downturn. 10-year yields in the U.S., those are moving higher by 4 basis points. Again, no drama, a rare treat for what's been over the past few days. And Aussie, again, man, is this surprising strength from the greenback, even though Australian data for inflation came in hot. Maybe a little bit of taste of what might be in stock for the rest of the world trying to grapple with rate rises. We have the ECB tomorrow, but it's a really clear buy the dollar kind of day.
Yeah, and even that stabilization in the IFO isn't enough to give succor to the euro. And you're right about the PMIs, globally the highest in 3 months, and inflation reading in those numbers are the lowest since the 2020. Stocks this morning are lower on NASDAQ. Why? Because the Clyde was supposed to have a silver lining. Well, not for Alphabet. It missed, and it really took a bruising. Down over 6% in the pre-market show. The other side of that coin is, of course, Microsoft. Microsoft delivering the strongest earnings in 6 quarters, and it was their cloud business in Azure that was up 29% in terms of numbers. Stocks are lower there. Asia is trying to understand what the stimulus story is from China. Yes, it's an emergency intervention. It's 1% of GDP. They haven't done this since 2008 or indeed during the Asian financial crisis. Asian stocks take a little bit of heart from there. Europe is lower. You've got Worldline down, but Porsche, I just thought we would focus in on Porsche. They're delivering more 911s. The deliveries are up by 27%, but they are warning about inflation and they are warning about China. And to that end, Danny, Porsche is certainly dipping a little bit this morning. So get your orders in. Get them in early, boys and girls out there, for your Porsche 911.
I promise you I will not be buying
I can see you in a Porsche with the top down,
soon.
actually. I can see you in a 911 Carrera. Yeah, you're a Carrera kind of guy. You really are. I've got you
Here's my dirty secret, Manus. I have a UK citizenship, but I never got my driver's license here. It's illegal for me to drive in this country.
Well, I don't know how to respond to that because...
Maybe there's no response. But Manus, you know what I'm thinking of when I see these different stock movers you have pointing out is our conversation with Mike Scott of Man Group moments ago. You know, it's nice to be an active manager, a hedge fundy in this environment when you finally have some dispersion among different companies. I mean, dispersion, we should say, even within the tech sector. We're going to talk to Matt Bloxham about this in just a moment. But you have differences even when it comes to cloud businesses among different companies.
Well, I mean, I got to say, you know, every cloud has a silver lining. Did you like that? I mean, I actually thought about
nice.
Yeah, I sent that through to you last night. You didn't read that email. You can actually see the emails that you don't read
I
from
didn't.
me. But the point about it is, of course, for Microsoft, I mean, the scale of this cloud business, this is sort of has made or broken, I should say, sentiment, and it's very obvious between Alphabet and Microsoft, isn't it?
It really is. And I mean, how much of it comes down to the AI offering from Microsoft? Well, I'll tell you who can tell us better than I definitely can. It is Matt Bloxham from our Bloomberg intelligence team. Matt, great to see you.
Yeah.
How much of Microsoft and the popularity, well, relative popularity of their cloud business versus others is due to just their one step ahead on AI?
Well, I think that's clearly what's driving the current relatively good momentum. I mean, I think the fact that they're in every corporate pretty much around the world has been a real great foundation for them to build their cloud business into what it is today. I mean, it's 3 times the size of Google's cloud business, so, you know, it's kind of really quite staggering that the relative size. But, you know, they definitely stole a march on the other big tech firms about how quickly they got generative AI out into the market. This partnership with OpenAI, ChatGPT, shifting to generative search with Bing, you know, that I think they really surprised everybody there, and that momentum has allowed them to kind of build this growth. So an accelerating growth rate this quarter on cloud, whereas we saw with Alphabet that it was a decelerating trend.
Let's just pick up on that. Matt, good to see you this morning. Thanks for coming in. That deceleration that you say for Alphabet, of course, they have other legs to their stool which were performing quite well. But why this differential? Does this come down to price? Does this come down to product? Does this come down to a bifurcation in the market, if you will? There's a number of major players out there, Amazon, Microsoft, and Alphabet. So is it becoming crowded, and is it becoming competitive? And is that why Alphabet has perhaps slipped a little bit?
Yeah, I mean, it's a very competitive environment. Obviously, the cloud's dominated by those 3, Microsoft, Amazon, and Google, but, you know, Google's a distant third. And I think to some degree it is about product and timing. You know, as I was just mentioning, you know, Microsoft's been ahead of the game getting generative AI products out there and integrating generative AI into its suite of Office products. And I think Google's just a little bit slower on that. You know, they were behind on Bard, which is their generative search tool. And I think it's going to take them a bit of time to catch up. And, you know, they were already a little bit on the back foot trying to kind of build share. And that's just another challenge for them.
I feel bad moving away from the cloud because Manus had the pun of the morning with his silver linings. But I got to do it. I got to break Manus's heart here a little bit. Look, obviously the share reaction price has been on cloud. But what about other businesses? How does online advertising look in this current environment?
Yeah, do you know what? I think that's the thing that Google will be frustrated about. It's actually their digital advertising business held up pretty well. It was better than expected in the quarter, but it's a big, mature business. I think it's been more resilient perhaps than people thought to both the economic headwinds, but also the challenge from Microsoft with Bing. You know, there was a moment where people were worried that suddenly Google Search was going to lose its dominant position because of Bing, but they've held that off. I think the issue there is that there are clearly economic clouds brewing. Some of the signals we've seen today and in recent weeks from ad agencies has been around, you know, slowing spending by clients in Q4. So I think it's a mature business, and I think if Google's going to justify the big multiples it trades on, it needs to convince it's got an extra leg of growth, and the extra leg of growth is cloud and AI.
Matt, these tech stocks, many lambast the fact that we have such core concentration and a lack of dispersion, to Danny's point. But how important is the next step? We're going to get Amazon. We're going to get a number of the other big beasts. We're going to get Meta as well. How important are they? And they've got their own issues at the moment. How important are they in terms of understanding what's really at the heart of the American consumer? And I'm thinking more so about Amazon, really.
Yeah, no, I think that they're all important to a degree in their different way. And I think until you see all of the results, it's hard to put that. It's quite a complex mosaic that we're looking at. But obviously, Amazon gives you a slightly different cut to it. You know, you're getting the health of the US consumer through their online consumer spending platform, but also you're seeing, you know, the strength of their Amazon Web Services cloud business, and obviously Meta as an indirect sense on kind of brands' confidence, because like Google, that's another big source of spending for advertisers. So I think, you know, we're going to see additional data points, and I think probably at the end of this week we'll have a much clearer view about the health of the US consumer, the pressures going into Q4, which is always a really kind of big spending quarter, both in terms of the consumer and brands on advertising.
Okay, Matt, thank you very much. Matt Bloxham there. A review and setting the stage forward for the rest of the tech earnings. Danny, we need to pause for a moment. We have some breaking news headlines coming from Prime Minister Erdogan in Turkey. Erdogan says this is going to perhaps escalate into a different story. Erdogan says Hamas is no terror organization, but a liberation group. Israel is the only state bombing cities day and night. And of course, it must be said, there are two sides to this. And obviously, there are the Hamas attacks, there is the Israeli response. Erdogan says he has cancelled his plans to visit Israel, and that he is saying Erdogan's Israel Netanyahu has abused his goodwill. So the top line here is he's cancelling his trip. He's making comments in regards to Prime Minister Netanyahu. This is, you have Joe Biden talking to Mohammed bin Salman of Saudi Arabia, trying to de-escalate the situation. You've also got other European leaders coming to the region, Danny. You've got the Austrian Chancellor, Karl Nehammer, arriving as well today. And this all comes, of course, as the Israeli calls on Antonio Guterres, the UN Secretary General, to step down.
Yep. Look, these are some very strong, passionate lines coming from Erdogan, saying that, as you say, Hamas is not a terrorist organization. But we should note that the U.S., UK, Europe, they all classify Hamas as a terrorist organization. But again, what does this mean for diplomatic efforts, Manis, if we do have Erdogan saying that he has canceled his visit to Israel?
Indeed, as the overall U.S. military build-up in the Eastern Mediterranean rises, there's certainly a pause in the full ground invasion. That is for sure. Some hostages have been released, and some small parts of aid have got through. We'll return to these Erdogan headlines in just a moment, right here on Bloomberg. We'll leave you with a snapshot of the FX market. It is the dollar. Excuse me. It is the dollar up by 0.25%. I'll leave it with you, Danny.
All right, there you go. Aussie, it is weaker. It's all about King Dollar this morning, as sterling also tanks lower by 0.3% as Manis goes and grabs a glass of water. This is Bloomberg Brief.
Will the Republican Party decide to do what the people want and work with Democrats? Or will the Republican Party continue just to fight with themselves? And that's really hard. If they're willing to do that, yes, we are here to do the people's work, but they have to be willing to actually to commit to some things that have become, anathema within their own caucus.
Democratic Congressman Sean Casten of Illinois speaking to Bloomberg. Joining us now is Jonathan Tamari of Bloomberg Government. So, I mean, on a daily basis, Republicans in the House remain in chaos, don't they? I mean, Tom Emmer, he lasted 4 hours and then he dropped out. I mean, listen, so now we've got Mike Johnson from Louisiana. He's being put up. Okay, just simply, does he have the numbers? Does he have the 217?
No one will know for sure, but he seems closer than anybody else has throughout this whole process. As you mentioned, Tom Emmer lasted 4 hours. Johnson is speaker nominee number 4, if you're keeping track. But the sounds coming out of last night's meeting were very optimistic. We've heard that before, but there seemed to be praise from all wings of the conference last night when Republicans came out. There's no major enemies that we've heard of immediately against Johnson, no major immediate criticisms, at least from a Republican perspective. Democrats certainly have some criticisms of him. But he seems to be the closest one to get there. And a lot of Republicans are so tired of this. There's a sense they might actually get this done today.
Wow. They would get it. I'm almost in disbelief. I feel like every morning I've woken up to someone new. So that seems significant. It could happen today. But one thing, Jonathan, that I saw circulating around yesterday was this post by former President Donald Trump on Truth Social, basically railing against Emmer, saying he says he's a Trump Republican. He's not. He's a rhino, et cetera, et cetera. How much of the shift is because of Trump? And what does that say to us about his staying power in GOP politics?
Well, I think it certainly tells us that Trump is the dominant force in Republican politics to this day, even out of office, even having lost re-election. His Truth Social post, Emmer, he was kind of in trouble already, and that post really buried him. Most people think yesterday the opposition to Emmer came largely from people in Congress who are aligned with Trump. So he's a very forceful figure. And notably, Johnson has one key thing that Emmer did not. Johnson voted to overthrow the results of the 2020 election in two key states, Arizona and Pennsylvania.
Do you think that gives him? Do you think that gives him? Do you think that gives him strength with those marginal holdouts who can fill or kill every speaker that comes along? I mean, is that, for want of better words, is that a good thing? That he went down on that side? Will that curry favor with the four, maybe five holdouts that perhaps are the swing in this election?
It appears so. I mean, the folks in that wing of the party who came out last night, people like Matt Gaetz, Congressman Bob Good from Virginia, these are people who voted to get rid of Kevin McCarthy, the former speaker. They were full of praise for Mike Johnson. So, obviously, we know that attempt to overturn the election was based on a lot of lies and falsehoods, but within the Republican conference, it's not a negative, and for some people, it is a positive.
Jonathan, lest we forget, while all this is going on, we are fast approaching the next deadline for a government shutdown. Does the length of this, how long the saga takes, how does that end up impacting Republicans' ability to reach an agreement to avoid a shutdown?
It doesn't really give them much time to negotiate, honestly. I mean, we're only a few weeks out here. It takes a long time to process these bills through Congress. It makes it all the more likely that we're going to see the exact same thing that got Kevin McCarthy kicked out of the speakership, which is a short-term spending bill until they can work out a longer-term deal. The difference happens to be, according to people supporting Johnson, that he has trust within the conference. He's got a little more built-in trust if he does make a compromise with the Senate and with President Joe Biden, whereas a lot of them were already skeptical of McCarthy before he cut the deal. But bottom line, they're almost certainly going to have to do a short-term compromise deal, the same thing that Kevin McCarthy did in September, right before Republicans kicked him out of office.
Let's just round off with one final thought. Where is he on war funding?
He has been a skeptic on Ukraine. So that is going to be a major sticking point potentially with the Senate and with the White House. Democrats want to tie Israel and Ukraine aid together to make them one package. A lot of Republicans oppose that. Yep. And Johnson has been critical of that aid. So it's going to be a major question if he does become the speaker.
OK, well, certainly there's a request for $100 billion worth of war funding for Ukraine and Israel. Jonathan, thank you very much. Jonathan Tamari there of Bloomberg Government right here from New York and London. Good morning.
Welcome back to Bloomberg Brief with Danny Berger in London, Manish Cranny in New York. All right, let's take a look at what's ahead, get you set up for your trading day. First, we're going to have data, new home sales. Those come out of the U.S. at 10 a.m. Eastern. At the same time, at 10 a.m., Bank of Canada, it will announce its rate decision. And then after the bell, the tech earnings, they continue. We've got Meta. We've got IBM. All of them, Manis, will report after the bell. We had those mixed results from Alphabet. We had those mixed results from Microsoft. Will they continue?
Yep. Well, we're going to know a little bit more about advertising and consumer trends as we go through this next set of earnings. Let's have a chat about the GOP. They may be in chaos, but earlier this year, it was the former crypto empire, FTX, that was the shambles, wasn't it? Bloomberg Originals' first feature-length documentary, Ruin. goes deep inside the story of Sam Bankman-Fried and his company's downfall. Joining us now is Bloomberg's Annie Massa, who's worked on the film. Good to see you. Exciting. This is the first. So what's the new info that the viewer, if they tune in, what are they going to learn about SBF from this documentary? I suppose really, I mean, this case has been fascinating so far.
Absolutely. It's been covered in a lot of depth, but I think the benefit of this documentary will be to take you inside and on the ground in places where the SBF and FTX story really unfolded. You'll hear from people who were embedded in the industry, who knew him directly, who invested in his company or covered the downfall. You'll hear from all kinds of Bloomberg journalists, and it really takes you to a new level with the story in a very visual way where you can see what happened.
So it's still unclear, Annie, whether or not we'll get Sam Bankman-Fried testifying in his own trial. Why is that important, whether or not we hear from the man himself?
The trial has been ongoing, and this is one of the questions that is really top of everyone's mind, is whether Sam will speak up to defend himself. In a typical white-collar criminal case like this one, you would not see someone testify in their own defense. But of course, SBF is a defendant who's very different from most out there. So the remaining question is whether he'll take the stand himself. And many have speculated that he might decide to opt for that, to speak up in his own defense.
Okay, well, we are all waiting to tune in. It's a first. Annie Massa there on Ruin. Tune in tonight, 6 p.m. Eastern, with a Sam Bankman-Fried story for you. Danny, a little bit of breaking news. This is from Christian Saving, the Deutsche Bank CEO. I know you caught up with the CFO, and he is talking about a very cautious view on hires and the job cuts, and this is critically important. The job cuts that are coming down the pike, they've announced additional savings are going to be bigger than what they announced back in April time. So this is doubling down on the commitment on new cost cuts and efficiencies, isn't it, Danny?
Yeah, I did talk to Von Moltke about this. He did say they'd be bigger. He did say that they'd cut jobs as a part of it. But what's new about this, Manus, as you mentioned, is that the job cuts will be bigger. The last time they announced cuts, it was 5% of senior non-client-facing staff. That equates to about 800 senior staff. They're also very cautious on new hires. If you're going to cut back on costs, Manus, I guess this is where you got to do it. You got to do it on the people, and we're seeing that come through. Yeah, and of course you've got this tussle, haven't you? As with all of these banks, you've got the fixed income team relative to the deals team. The fixed income team underperforming relative to the U.S. Wall Street peers. And then, of course, they've downsized some of that IPO deal-making business, so it's just not enough to balance it. I'm just looking back on the 27th of April. They announced 800 senior back-office staff. And this was his step up. This was savings step up to cut jobs back then. So they had originally estimated they'd save 500 million by 2025. Yep. So this is upping that target, isn't it? It is, and I contrast that with Goldman, which, let's be honest, is a completely different bank with a completely different business set. Yes. Remember, Manus, in their earnings, they were going to pay up for more. They said we need to retain talent, a lot of uncertainty. $690 million extra is what they were paying out to try to hold on to people. Well, you know I want to come back as a junior banking analyst. I'll just leave you with that thought. From Bloomberg Brief to Bloomberg Surveillance, from Danny and I.